And for this, I'm joined at the desk by Peter McGuire from XM. Peter, thank you so much for joining us. Let's talk about the job market in the US, which has been extraordinary, actually, for quite a while now. I mean, the jobless rate just keeps falling. What is it, 3.8 or 3.9%?
About that 3.7, 3.8.
Yeah.
You know, the strongest number since 1970, the start of 70.
It is extraordinary stuff. So next Friday, we're going to find out the latest reading. Now, what is the expectation for the number of jobs that are going to be created? And also the jobless rate, if you happen to know.
Well, they reckon it's going to be about a 178 handle. So if we get 178,000, I think that's going to put us fairly good stead rolling into February and March and April. Now, remembering that you would expect to see good numbers coming through with retail sales and people being re-employed or looking for work over those last couple of months. Now, you've got to also understand the other thing, which is quite important. As we've seen that sell-off in equities, this is not a bad time to give us a little bit of, I think, uplift and keep that momentum moving forward. Hopefully we can see a bit of a reversal here, Adam, and some good times ahead.
What about on the wage growth front? I mean, my memory is that wage growth in the US rose to 3.1%, I think, a few months ago, and that was the highest for quite some time.
Absolutely.
I mean, increasingly, I sense that the Fed is actually looking at the wage growth figure more even than the unemployment rate, because of the consequent impact on inflation. So what might we expect, if we get that 178, what does that imply, if anything, about?
I think there's been a fairly big turnaround. We all realised since the GFC that many people have worked in any form of industry in the Western world. The great handbrake was that people were getting jobs, but they weren't getting an increase in hourly wage. Now you're seeing that push through in the US over the last year or two, dividends, share buybacks, and general feel good as far as the market. So as people are earning more per hour, that in turn with inflation under control gives them more spending power. And that could be something also to keep the momentum moving forward in the market.
It sounds like you're mostly of the view that the real economy is actually going pretty well, and all of the pessimism in equity markets recently around the world is somewhat odd. Is that right?
I think so. You think about the share buybacks, think about the dividends of 2018, and it's been an extraordinary year for US equities. Now, you've got unemployment numbers back at the lows of that we experienced in the early 70s. And if you put your mind back to the 1970s, we had Vietnam War. We were certainly, a hyper-growth economy, and things were very, very solid from that move. And the late 1970s were a very dire year for US economy, but certainly the early part was not bad at all. So if you examine that, you examine as far as cheap money, and that's really, and with inflation under control, it's been an incredible 5 or 6 or 7 years of bull market for equities. And, markets come back at them and they're a bit exhausted. I think we're just, we're maybe an inflection point and move higher from here.
We're just moving to Australia now, and indeed the Australian dollar. We just had a brief look at currencies earlier.
Yeah.
Now, the Australian dollar is just above 70 US cents. I think on the year it's down by about 9 cents or something like that, which is a really big fall, right?
Massive fall.
I mean, surely that's a vote of no confidence to some extent in the Australian economy by foreigners?
I think it's also, we've got to take on board that the Chinese stock market's down $3 trillion this year. Europe's down Asia's down $5 trillion in value lost. Now, we are a proxy in some ways, our currency, for the Chinese economy. Now, if these trade talks, and I've only seen that in the last matter of an hour or two, as far as President Trump now just saying that he's spoken with Xi and it seems to be a turnaround as far as trade, if we see that momentum and if they can work a deal out, then that's going to be a plus, and I think that's going to certainly assist the Aussie dollar to the upside. I feel as though in some ways also, if you see the US take a handbrake to the Fed rate rises for 19, then that's going to probably wash out the US dollar a little bit, which in turn will make ours stronger again.
Now, look, I just wanted to ask you about what you think is going to happen over the next few weeks in relation to Brexit in the UK. Of course, whatever happens is going to have ramifications both for equity markets and also currency markets. What do you think is the most likely outcome over the next few weeks? Of course, we've got the vote on, I think, the week beginning the 14th of January in the House of Commons. Let's assume that it fails.
Yes.
Then what?
Then what? I was in London a couple of weeks ago, and when you talk to the man on the street and people that are just, that live in the UK and very smart analysts, everyone's a bit dumbfounded by it. They're not sure whether they have another referendum. They're not sure whether it's going to be a hard Brexit, a soft Brexit, whether May at the last matter of a couple of hours actually gets it through. And we also understand that the 29th of March is the deadline number. So if there is no other referendum and if Europe play hardball, I think it's going to be fairly tough on UK. If it goes the other way and they seem to be able to piecemeal the deal together, I think that's going to push up the value of the pound quite strongly. So it's going to be a nice little fairly strong move to the upside. there is, again, so many moving parts that it's hard to even forecast. The UK government don't know what's going on, let alone, and even Boris Johnson or the likes of Theresa May. So it's a bit of a mixed bag.
And certainly the communication strategy, I think if you could call it a strategy, has been very bad. As you say, there's just so much uncertainty.
Well, the man in the street, remembering also that the people in London they don't want a Brexit.
Exactly.
And the people outside of London, and if you're older, they certainly do want a Brexit. So you've got a mishmash there and a dislocation between different frames and of course different demographics across the whole UK.
Well, just finally, I want to come back to Australia again and ask you about a growth of credit. Now, in about 10 minutes' time, we're going to get the latest figures.
Yeah.
Now, there's been so much talk now for months of a credit crunch and the consequent impact that might have on the Australian economy. I'm just wondering where you stand on this issue of whether there is one happening and whether you're concerned that there could be a sharp slowdown in lending.
You know, I think the Reserve Bank have got to take a very close view, like the Fed do in the States, as far as the housing slump for the biggest markets in Australia, which is Sydney and Melbourne. There is no doubt that the market's off. I've spoken to industry people over the last couple of weeks, and some people have said they've been in real estate in Sydney for 30 years. These guys are pros, professionals in that space, and they've never seen anything like it in the last 8 months. So that really is a little bit of a wake-up call. These guys have lived through the early parts of, they remember the 91, 92, 93 recession. They remember what it was as far as downturns and certainly the GFC. And for those comments to come out and for a market to wash out, I think that you're going to see that the banks take a different view to make sure that they can stabilise any form of sell-off. We're not talking about Brisbane apartments or something out the back streets of, in all due respect, Tasmania. We're talking about the two biggest markets that make up the true value of Australian real estate, which is Melbourne and Sydney. And they need to really take a close view on that.
Okay then, Peter McGuire from XM, thank you so much for joining us on this New Year's Eve. Happy New Year to you too.
Thank you, Adam.